Good morning. It's great to have your company this Monday, the 19th of July. I'm Jessica Ramir, a Senior Market Analyst with Bell Direct. Well, given the increased restrictions in Sydney, we'll be bringing you audio updates for the time being until restrictions ease. So thanks so much for staying with us, but we'll be back on deck once everything's back to normal. But now to markets. Well, at the weekend, we saw US equities briefly hit a brand new record all-time high, but then stocks fell into the red. All three of the major indices closed lower on Friday. The S&P 500, in fact, down 0.8%. But it's important to think about what led to that selling. It was largely oil stocks. Oil companies have been some of the best performers in 2021, but oil stocks fell at the weekend because investors are now taking profits in the sector ahead of OPEC and other oil producers finalising a deal to increase oil production. So I guess this is causing a bit of oversupply fears. But do keep in mind there's light ahead of the tunnel this week in the US. Some of the biggest companies in the world are reporting earnings results and they're listed in the US. So if they're better than expected numbers, they'll likely boost markets this week. In the US, we'll hear from IBM, Netflix, Intel, Johnson & Johnson and Twitter. So it'll be a huge week. And locally, what to watch for us? Well, it's also going to be a huge week for Australian vaccines, which ramp up. Last night, Australia received 1 million Pfizer vaccines and will continue to receive 1 million doses each week of the Pfizer vaccine until the middle of August. So good news there. Now, in terms of equity markets, the futures are suggesting a bit of a negative start to the week. The futures were earlier suggesting a pullback of 0.5% following Wall Street. We know the increased restrictions in Melbourne and Sydney are likely to take a toll on the Australian economy. Now the numbers are out. Economists are expecting GDP, economic activity, to fall by 1.4% from July to September. So why is that? Well, the most populated city, Sydney, will effectively be ground to a halt from this week because new restrictions came into place from last night. We know 250,000 construction workers were told they can't go to work today. Non-essential retail stores in Sydney will be closed, and Sydney's public transport has been halved. Timetables reverted to Sunday schedules. With all these new restrictions tabled to end at the end of the month. On the positive side, though, we know the Commonwealth Bank of Australia, CBA, that's a ticker, they're offering loan deferrals, and Westpac WBC, they're also offering interest-free temporary overdrafts. So for investors, it's important to think about what this means. Given the increased restrictions, we know we could be expecting some of those stocks that have made extraordinary strong rebounds to now pull back. So this week you might expect energy stocks to take a haircut, as well as banks and of course the construction industry. So keep an eye on stocks like Boral, BLD, Brickworks, CSR, as well as CIMIC, CIM, that's their ticker code, and Fletcher Building, FBU. Now, on the bright side, though, something to think about, secondly, is Australia could get a huge injection of capital. A massive boost to our economy could be coming our way because we could be hosting the Olympics in 2032. On Wednesday, we'll find out if Brizzy will be hosting the Olympic Games. It'll be a huge win for infrastructure stocks, engineering, travel, tourism and hospitality as well. Now, the third element to factor in today, commodities. Some big moves at the weekend. The iron ore price rose 0.5%, copper up 2.4%, while the coal price surged to its highest level in a decade. So keep an eye on those coal stocks today on the ASX. As for trading ideas that could be worth a look, Citi put out a research note on Afterpay APT, reiterating the stock as a hold, $125 target for Afterpay. But what was really telling in the Citi research note was that analysts have found that Afterpay is gaining quite a lot of traction in Canada, which is positive when considering the local buy now, pay later competitor there called PayBright has got a head start there. But look, Citi thinks that Afterpay has benefited in Canada because they've got existing merchant relationships with the likes of Lululemon, Gymshark, Pandora, etc. And Citi also sees this traction in Canada as positive and could also help with cross-border transactions in the US. And lastly, definitely not least, bullish charting signals have been seen in Neo Metals, NMT, Arctis, AR9, and Strike Resources, SRK, and that's according to Trading Central. Stay safe, happy trading.